Hello friends, on behalf of BnCMS Study Festivity, I am Dr. Kr.Chakrabarti. Today, this is the 5th class of our phase 2 of accounting. Phase 2 is concerned with partnership accounting. Partnership accounting phase 2, and I have already taken up 4 classes on partnership accounting, and out of that the class number 4 was concerned with profit and loss appropriation conceptual discussion, and that is profit and loss appropriation account 1. And now I am taking up a problem, and the problem is to be solved along with the journal entries, and this is class number 2 of profit and loss appropriation account. As you know that in the previous class, that is class number 4, I have told you what appropriation is. Appropriation has got its own meaning. Appropriation has got 2 dimensions. One is allocation of some fund, especially profit, in case of partnership account under some different heads. This is number 1. Then these heads are to be shared, or the amount of that head is to be distributed among the partners. That is sharing and distribution of that heads among the partner, and that is known as sharing. So this is 2 parts. Appropriation of profit is 2 parts, allocation of funds after allocation of profit under different heads, and now this each and every head will be shared and distributed among the partner. That is second part. Now take up the problem. So I have taken up a problem. Mr. A and B, Mr. B have been carrying on a business, partnership business, prepare profit and loss appropriation account for the year ended 31st of March 2021, taking into consideration the following information. So this is the problem given for preparation of profit and loss appropriation account. Now the first item, capital as on 1/4/2020, Mr. A 2 lakhs and Mr. B 15 lakhs. Now interest on capital, as per their agreement, the partners are to be given interest on the capital at the rate of 10% per annum. The partner's salary, A will be entitled to a salary of rupees 5,000 per month, and partner's commission, Mr. B is entitled to a commission of 5% on sales of the sale being 8 lakhs. Interest on loan at the rate of 10% to Mr. A, the loan amount being 50,000. Then partners drawing 40,000 and 30,000, the interest on drawing 6%, that is interest on drawing 30,000 and 20,000. Sorry friends, it is 30,000 and 20,000, and out of that the partners are to be given interest. And transfer of reserve 10% of the divisible profit, and profit to be shared among the partner in the ratio of 3:2, and profit earned during the year 2,25,000. So with this information 6, 7, 8, 9. So with this information we have to prepare profit and loss appropriation account. So in order to prepare, generally what do the teachers say, do you know? Just you prepare a format. That is the format. It is the same format. It is the same format at that of profit and loss account. In the profit and loss account, we have 2 aspects. One is debit and the other one is credit aspect. In one particular and one amount. But I have for our clean presentation, we have 2 accounts, one for inner column and the other one is outer column. In inner column we make necessary addition and subtraction. Okay, so inner column, and so there are two columns in amount, one particulars, two amount column, again that is for debit side and the same for credit side. Clear? Now think, how would I prepare this? Just let us start with the journal entry. You know that profit is a credit balance, right? Whenever you are preparing profit and loss account, say in this part it is 2 lakhs and here it is 1,80,000, the balance is 20,000. So this is the profit. So it is the profit is the credit balance. Clear? Now this profit, if nothing is there, we show in the balance sheet. In the balance sheet we show profit and loss. Say it is 20,000. Say, so it is in the liability side of the balance sheet. Liability side of the balance sheet. Now this why it is put in the liability side? Because it is the credit balance. If had there been any loss, in that case in the profit and loss account it would have been, say it is 1,80,000 and it is 1,70,000. So 10,000 is the loss, and in that case loss would have come in the asset side of the balance sheet. Although it is not an asset, it is the loss. It is the loss, and it is the profit. So profit is the credit balance, and it is the liability. It is the liability of the organization, because this amount is to be paid to the partners. This amount is to be paid to the proprietor. In case of single proprietor, it will go to that particular person. In case of partnership, it will go to the partners. Okay, so profit is the liability and it is in the credit side. And in case of loss, in the debit side, in the asset side, the balance sheet, what we write? We write all the assets. But profit and loss account, loss, it is not an asset, it is the negative liability. So this amount is to be made good by the partner. So the partners are responsible to maintain their capital intact. They must invest further amount. Okay, so it is in the liability side, asset side. So profit is a credit balance and it is the liability of the organization. Now this profit is meant, this year our organization, the organization in question, has earned 2,25,000 profit. So our profit and loss credit balance is how much? 2,25,000. Now we have to pass the journal entry. What will we do? The profit and loss will be debit. Profit and loss will be debit because it was credit, and it is transferred to profit and loss appropriation account. How much? 2,25,000. Okay, so 2,25,000 is our profit, and that profit is being transferred. A profit को हम कहाँ ट्रांसफर कर रहे हैं? प्रॉफिट एंड लॉस एप्रोप्रिएशन अकाउंट में. क्यों ट्रांसफर कर रहा है? बिकॉज इट इज टू बी, दीज आर टू बी एलोकेटेड अंडर सम हेड्स, एंड अगेन दैट हेड्स आर टू बी शेयर्ड बाय द among the partners, okay, by the partners. So profit and loss account debit to profit and loss appropriation account. So appropriation account is credited. Appropriation account is credited with the net profit earned by the organization during the year, and that journal is reflected in the ledger posted. Profit and loss account debit to profit and loss appropriation account. Clear, friends? So this is the first task. Clear? Now think, this profit of rupees 2,25,000, these are to be allocated under some heads. I have told you in my previous class, in class 4 and partners profit and loss appropriation account 1, that these profits are to be allocated under what? Under allocated under this head. Number 1 head is partners salary. Okay, so for if any partner is given the salary, what will happen? Their capital will be enhanced. So partners capital account will be credited to partners capital. A and B. And what is debited? Profit and loss appropriation account is debited. Why it is debited? Because this amount is being reduced when you have earned a total net profit of rupees 2,25,000. That amount has been transferred to the profit and loss appropriation account. So profit and loss appropriation account में हम कितना रुपया ट्रांसफर किए, हम जितना प्रॉफिट हुए हैं सर उतना ही ट्रांसफर कर दिए. तो दिस इज नथिंग बट द ट्रांसफर एंट्री. इट इज नोन एज transfer entry. Okay, transfer entry. Profit and loss appropriation account credit and profit and loss account is debit, and as a result profit and loss account there remains no balance. All the total balance is transferred to profit and loss appropriation account. Now it is the fund. I have told you it is the fund, it is the money that is in the credit of its account, and this account will be segregated under different heads. Clear? The first head in our case is profit and partner salary. देखो, what we have, the profit and loss appropriation is being reduced, so it is debited, and for what purpose? For partners capital. So partners capital accounts of Mr. A and B are announced as a result of the interest on capital. So as a narration you write interest on capital at the rate of 10%. So what is the amount for A? देखो, profit and loss appropriation account debit to partners capital. A को how much? 20,000. A 20,000. B 15,000. How much total? Total is 35,000. So out of the total fund of 2,25,000, 35,000 has been segregated. It has been taken out for the purpose of distribution among the partner for in the grounds of interest on capital. So profit and loss appropriation account debit to partners capital. Here it is interest on capital. Clear? So it is 20,000 and 15,000. So 35,000. Clear? So this is our first allocation. Second allocation, allocation 3. The partner's salary, Mr. A. Mr. A is entitled to a salary of rupees 5,000 per month. What does it mean? The capital, this amount will be transferred to the capital of Mr. A. So Mr. A's capital will be enhanced. So partners, that is Mr. A's capital account credit, and which will be debit, profit and loss appropriation account debit. Why it is debit? Because the fund is being reduced. It was a fund of rupees 2,25,000. 2,25,000. Out of that, rupees 35,000 has been reduced. Under what ground? It is on the ground of partners' interest on capital. Clear? So again, profit and loss appropriation account is debit to Mr. partners capital A. That is A's capital. How much it is? It is 60,000. So 60,000 is debited. 60,000 is debited to profit and loss appropriation account, and it is being credited to Mr. A's capital account under the head partners salary. So Mr. B is entitled to a salary, so that amount will be given to Mr. A. Now comes to the next part. Partner commission, 5% on sales. What is the total sale? And it should be given to B. So Mr. B is entitled to a commission on sales at the rate of 5%. So 5% of 80,000 is how much? It is 40,000. So Mr. B is entitled to this commission. I am rubbing this part, friend, and now this is 4. Now profit and loss appropriation account is debited because the amount is reduced, and it goes to partners capital B. Under what head? Partners commission. Partners commission at the rate of 5,000 at 5% on rupees 8 lakhs. Okay, so it is 40,000. 40,000. So 40,000 is being transferred to Mr. B's capital. What is the journal entry? Profit and loss appropriation balance is being reduced. So it is credit balance. When it is reduced, it should be debit. So it is debited, and partner's capital, Mr. B, is credited. Clear? So friends, I am rubbing this part. Now see what it is over here. Interest on loan. Mr. B has given, A has given a loan of rupees 50,000, and as per their terms and condition, as per their agreement, any partner providing any loan to the business house would be entitled to a 10% commission. So now again, so what is the amount of commission? It is, the loan amount is 50,000 and the commission is at the rate of 10%, so it is 5,000. So 5,000 capital account of Mr. A will be enhanced. So two partners capital A, how much? 5,000, and what is debited? Profit and loss appropriation account is debited. So again, it is the segregation of fund to for the purpose of giving interest on partners loan at the rate of 10% per month. We presume that the loan has been given on the very inaugural date of the year. Okay. Now see, this is again what happens. The profit and loss appropriation account is credit. Its balance is reduced, so it is again debited, and partner's capital account, Mr. A's capital account is credited. This is also an allocation of fund, allocation of profit and loss appropriation account, allocation from profit and loss appropriation account, and it will be given to Mr. A. Clear? Now next part. The interest on drawing at the rate of 6%. A has withdrawn rupees 30,000 and B has withdrawn rupees 20,000. So this is a very, very important aspect. Now when the partners are giving, when the partners are investing capital, they are getting interest. So it is the income of the partner. Now when the partners have withdrawn some amount from the business house, it is their responsibility to pay interest to the firm. Now Mr. A has withdrawn 30,000. Mr. A has withdrawn 30,000 and B has withdrawn 20,000. And as per the provisions of the partnership, as per the agreement, they must pay rupees 6,000, 6% interest per annum, PA per annum. So per annum, annually they have to pay 6% interest, but we do not know on which date they have withdrawn the amount. It may be that they have withdrawn the amount from the very first day of the business, and if they withdrawn the amount very first day of business, then it will be how much? 30,000 into 10%. Okay? Clear? Into 10%. For how many months? For 12 months. Now, if we think, no, they have not withdrawn the amount at the initial date of the year, they have withdrawn the amount at the last day of the year. So in that case, what will be the interest? The interest will be 30,000 into 10% for 0 months. So it is what? So we have taken the two aspects. One is we have considered for the whole year, and then again we have considered the amount was withdrawn at the flag end of the day. So we have taken two amount. So it is how much? So there are two things. We have to make it average. If we go on averaging, then it will be how much? What is the percent? Sorry, 10%. No, sorry, 6%. So 6%. Okay, it is how much? 18,000. Clear? 18, and here it is how much? 0. So 18 plus 0 divided by 2 equals to 9,000. We call it an average period. So friends, for technical hints I am letting you know, something with regards to drawing. If the interest and drawing is written as Interest on drawing at the rate of say 6%, nothing else given, not per annum or annual interest, then we will charge straight 6% interest. That is, on 30,000 it will be 18,000, and on 20,000 it will, sorry, it will be 12,000. So the interest would be 30 for the whole year. But when the question of per annum is given, then we should take the average period. The interest would be calculated on average period. Okay. And as this interest is a provision, is an income, but is a flow of fund from the partner to the business house. So it enhances the profit and loss appropriation balance. So profit and loss appropriation account should be credited, and partner's capital account for drawing interest on drawing should be debited. Okay. So it is profit and loss appropriation account is credited. Now more or less segregation has been done. Now the official remaining part is that the total amount, the total fund of rupees 2,25,000 added another 15,000 on the ground of interest on drawing. The total fund of the organization is how much? Of the partnership house is 2,40,000. Out of that, 35,000 has been allocated, segregated for partners' interest on capital. 60,000 has been kept aside or allocated for partner's salary. 40,000 allocated separately for the partner's commission to B, and again 5,000 to Mr. A for interest on loan. The remaining amount is rupees 1 lakh. Now this 1 lakh should be distributed, must be distributed among the partner in the profit sharing ratio. But and if it is distributed among the partner, what will be the journal entry? The partner's capital account will be credited to Mr. A or to Mr. B in the ratio of 3:2. Say indeed is written over here, and it is how much? Profit and loss appropriation account. Appropriation account. What will we should write? Share of profit. Share of profit. This is an addition. Share of profit. Clear? So it should be how much? It is 1 lakh. It is 1 lakh, and it should be for 60,000 and 40,000. It should be. So the for ultimate distribution of profit, ultimate distribution of or the sharing of profit among the partner's capital account will be credit, and profit and loss appropriation account will be debit, and thereby we will neutralize the balance of partnership appropriation account. So it will be 2,40,000 and it will be 2,40,000 too. But before segregation, before sharing profits among themselves, the partners very often the partners do not like to take away all the funds. They keep aside, they like to keep aside some fund in the business house in order to meet future exigencies, and that is why they keep some amount reserve for meeting the future exigencies. As I have told you, आपको मुर्गी ने अंडा दिए हैं, वो जो 20-25 को अंडा दिए हैं, अब 25 को अंडा आप नहीं खाइएगा, तो 20 को आप खा लीजिएगा, 15 को खा लीजिएगा, 5 को 10 को रख दीजिएगा अगले दिन में बच्चा के लिए. ओके, सो we will keep aside some fund. In our case, in our problem, that a transfer of reserve at the 10% of divisible profit. Divisible profit, what does it mean? Very often, if it is written 10% of net profit should be transferred to reserve fund, I would have transferred to reserve fund 10% of this amount, 22,500. So we should write over here to reserve fund. Okay, how much it should be? It would be this much, 25,500. But in our problem it is written transfer to reserve 10% of divisible profit. What is the divisible profit? Divisible profit is the net profit earned and make necessary adjustment that is adjustment with regards to addition with regards to interest on drawing, deduction with respect to interest on capital, deduction with respect to partner's salary, deduction with respect to partner's commission, deduction with respect to interest on loan. So the total credit minus the total debit, and the difference is 1 lakh, and that is known as divisible profit or distributable profit. Take care of this one. If you are asked to transfer 10% of the net profit, 10% of net profit, then 10% of this to be transferred to the reserve fund. Okay, so this fund would have come over here to reserve fund. But whenever it is stated that 10% of the distributable profit means profit, the net profit that have been transferred to profit and loss account, appropriation account, that is credited, add interest on drawing, and then less partner's interest on capital, less partner's salary, less partner's commission, less partner's interest on loan. So the remaining balance is distributable profit or divisible profit, and that profit is carried down. So it is distributable profit CD, and it has been brought down PD, and out of this 10% should be transferred to reserve fund. So we have passed the journal entry, profit and loss appropriation account debit to reserve fund, profit and loss appropriation account debit to reserve fund. Profit and loss appropriation account debit to reserve fund. Reserve fund. What is that? It is the 10% of the distributable profit. Distributable profit is the difference of this total minus this much. So it is the distributable profit, and it is 10,000. And the remaining profit, how much? It is 90,000 should be distributed among A and B as their share of profit. So the final journal entry will be profit and loss appropriation account debit to Mr. A to Mr. B. What is the amount? 90,000. 90,000 3/5. So since the ratio is 3:2, 3:2. So the total profit should be segregated, divided by 5, and it should be multiplied by 3 in case of A, and multiplied by 2 in case of B. So profit and loss appropriation account debit to AB regarding the share of profit. Okay, this is the narration. Clear? So this is more or less all about profit and loss appropriation account. A very, very simple thing. I am letting you know. I am covering up within 2 minutes the whole thing. Profit and loss appropriation account is prepared to do two things. One is allocation of profit under different heads. The heads are partner's capital, interest on capital, partner's commission, partner's salary, partner's interest on loan, and it is enhanced with the amount of any interest on drawing to be given by the partner to the firm, and a part should be transferred to reserve fund, and the remaining amount is to be shared as share of profit among by the partners. It may be 2, 3, 4, whatever the number of partners, and in all segregation, profit and loss appropriation should be debited, and this specific head should be credited, what we have done, and ultimately our profit and loss account have got the zero balance. Clear? So thank you very much, friend. Please go through the topic minutely, and if you have any problem, then text me in my WhatsApp number, and I will give necessary answers, instructions, and for any note you may text me also. Thank you very much.